Hello everyone, today we'll talk about the General Electric. And I am Xindi Qiao. I will do the introduction, question 1, and the conclusion. And Target will talk about the question 2, and the others will do the question 3. Let's move on to the question 1. So, what are impression management and earning restatements? So, impression management is a conscious or unconscious attempt to control images that are projected in real or imagined social interactions. And earning restatements, also called an earning recast, is the act of the disclosing amended financial statement. Previous reported earning figures that have been revised to incorporate new information or new calculation methods.
Earnings restatement is the operation of disclosing amended financial statements. The reason behind earnings restatements are results from the past events linked to errors, misrepresentations, or fraud. Reasons for the earnings restatement are divided into the internal reasons and external ones. Looking at the internal reasons, the change in accounting policy and correcting errors are two main reasons for the process of earning restatements. And the restatement must be done according to the International Accounting Standard number 8 that considers accounting policies, accounting estimates, and a correction of errors. Also, earnings restatements must be done if a company changed its ownership type in a current year and it had an impact on a financial statement. Considering the external reasons, the change in general accepted accounting principles lead to restatement of the company's statement, especially earnings. For example, if a company was asked to switch from a first in, first out costing policy to a last in, first out, the inventory valuation on the prior year comparative statements would also be restated to follow the new policy. Similarly, for the change in law, if government changed in law, for instance, higher tax rates, companies are required to restate their earnings as well.
The first and easier methods of impression management is pictorial evidence. Examples of these are pictures, graphs, and positive headings in bigger fonts to catch the reader's eye. In General Electric's 2018 annual report, there were many headings which spoke of returning General Electric to a position of strength. For stakeholders other than crucial investors and shareholders, these headings will be taken at face value and will therefore portray a positive image of the company. In this way, impression management has been used to instill trust in the company and exaggerate its capabilities to change following an earnings restatement. This technique can also be seen on page 8 of the report, which highlights the significant revenues each sector of the company has made. However, further down, the report also states that it has sold 4 of these sectors, inflating revenue by around $5.9 billion. Therefore, this technique may not always be successful, as it is built on the assumption that all shareholders will not fully analyse the report. In the case that they do, this will have the opposite effect than the company first intended. The second impression management technique used in the General Electric reports was narrative evidence. This is the use of forward-looking and positive words throughout the report following an earnings restatement to give the impression that the firm feels accountable for their mistake, but is also willing to change to ensure this problem doesn't reoccur. In order to get a sentiment of the contents of the General Electric 2018 annual report, a frequency survey was carried out using the program NVivo, with the results showing what the main message of each paragraph was and how many times this message came up in the report. Results showed that the positive messages highlighted sustainability, bringing the company back to a position of strength, and General Electric's drive for innovation. The negative messages focused on change, being less reliant on corporate office and volatility in the market. This technique has been used in order to explain the changing prices of shares and drive home the idea of a forward-looking company. Again, this technique could be misinterpreted because the angle that each message takes is subjective. This technique also assumes that the quantity of positive messages is equal to the quality.
An impression management technique that firms such as General Electric use is apologies. Apologies refers to responsibility taken for events that have taken place or mistakes that have been committed. In the case of this firm, the company had to restate its accounts following mistakes made with the report of their earnings. Apologies, however, have a great emphasis put on the forgiveness and the result that could be achieved through this apology instead of the apology itself. This is a way for firms to tell investors that they can still be trustworthy despite the actions that have been committed. In the following quote by General Electric in the 2017 Integrated Summer Report basically states that the company apologizes for the action they have committed, and they are currently reshuffling corporate and power in order to appease their investors. However, the interesting part is the second part of the quote. The company is saying that this is not usual behavior by the firm. This is highlighting the fact that General Electric wants to be trusted as a firm. They want investors to view them as a potential for investment. Another impressions management technique that firms use is exemplification. Exemplification focuses on morality and portraying or highlighting a company's moral worthiness in order for it to seem more aligned with its audience. Companies always try to portray themselves as the best for their investors. This is a quote from the company's website. They're basically saying that they are trying to achieve their goals and that they have very much importance for the environment and their workforce and technology. And this, once again, helps to bind together investors and shareholders, not focusing on the mistakes they have made.
The last two techniques I introduced is excuses and self-promotion. Excuses is explanation of the event that made by a person do something unacceptable to get the punishment not too severe, and also to protect the image of the company. In our daily life, we also make excuses to justify our behavior, and the company does as well. So we find evidence in the GE report. There's some changes of the accounting agreement accounting, and to influence the industrial business, lead to a reduction of the related contract asset balance. And another evidence is in 2018, big execution and the marketing power partially offset by strength in aviation and healthcare. So next I introduce self-promotion. It draws special attention to one's best qualities and achievement, and it's a strategy to perceive good impression by emphasizing on achievement. We've always seen that let others to praise you, not by all mouths, but anyway, for companies it's an important technique to promote themselves, to let others to invest in the company. As evidence, like in the 2017 GE annual report, we fight for and support our customers more than 180 countries. We innovate and drive new industrial paradigms, like additive manufacturing and software analytics. Yeah, they just tell their strengths in the industrial, and GE matters because our technology helps bringing progress and possibility to every corner of the planet. The whole, it's a really big picture. So the investors just to have an image of the image that GE is a big company to invest. They will succeed in the future.
In summary, these impression management techniques are built on the assumption that the reader will not analyze the full report, leading to the opposite effect first intended. If the reader doesn't take into account some of these techniques, they will take other resources such as the exaggerated article to the truth.